Hi, and welcome to the Trade of the Day for the 10th of December. My name's Tom. I'm a senior trading analyst here at Trend Signal. We're going to go through a trade on our intraday charts, looking at the US 30 yesterday afternoon, and an opportunity where we had the option for 122 pips in just about 22 minutes or so. We'll go through that. I want to show you a few other opportunities and a couple of different style of trades you could use to really take the max out of this move as well. We'll keep things simple to start though, in case this is your first time seeing this. Let's draw a couple of lines onto the screen. I'll use a few different colors. But the way that the system works is we're looking at cycles of intraday volatility. We get in, we get out when the conditions are there, and we just do that over a couple of hours. You can trade this all day. You can just do it in hour bursts. It's completely flexible. There are no trades left on overnight. So it's really nice for anyone who's a little bit nervous about the fees and the potential for a trade to go awry when you're not there. So we'll use three lines for this. We'll come back to those in a moment. But essentially, the way the system works is every single time we get an arrow flip, we get the opportunity to look for a new trade. It doesn't mean there is a trade. It means we can start looking for a new trade. Now, there's a five-step process. We'll start with this previous one. Now, we're looking for a buy trade, and it very clearly goes completely the wrong way. It's never a trade. The reason is rule 3, we're not on the right side of the channel. But I'll show you that more in the sell trade that we take shortly afterwards. So we get the end of looking for a trade. It flips over, and we can start looking for an opportunity. In this case, a short because the arrow is pointing down. That's, I suppose, step 0. Now, rule 1 is where does that arrow place itself? We consider, because it's our stop loss that forms on here, we consider the opposite side of the channel. Are we inside or are we outside of the blue band? In this case, we're well inside. We're in the middle of an existing trend. The market is not stretched to the upside. And when I zoom out, you'll see that it definitely isn't. It's been selling off pretty heavily. That means we're not looking for a high energy trade. The market isn't primed to just suddenly smash in the opposite direction. We're looking for essentially almost kind of like a continuation of the previous opportunity. So we go for what's called a low energy trade, and there's a set of 5 rules associated with that. So step 1 is identifying that. Where is the arrow? It tells us it's low energy. It tells us the rest of the process. Step 2, vector averages. That is change colors from red to green, the 2 lines that snake through the candles. That's telling you short-term momentum. We need short-term momentum on our side in any type of trade just to maximize the probability that we're going to end up going the right way. In this case, they're both red, so perfectly fine. Step 3, candlestick position. Because we're inside a low energy trade, we want to be below the purple PE line, this purple line here. The reason for this is pretty simple. If we take it too close to the center of the market, there's a good chance it snakes up on the wrong side. All of a sudden, momentum's against us, and you're on the wrong side of the resistance. The strongest resistance on the chart often forms dynamically with the mid band that I'm kind of squiggling across right now. So by giving it to the purple, it means we're more likely to catch an actual strong movement. And if it does start to falter, there's a chance of resistance and deflection to continue to move a little bit further on. So step 3, perfectly fine. Step 4, we look to the R ratio. That's on the left-hand side here. It just needs to be a positive number. And by the time we get that arrow flip, it's 167. The market is plenty wide. It's moving. We're unlikely to get chopped out of a position. If it's negative, we don't take it because it's going to be a bit more choppy. So that's good. And then finally, we're inside the band, so we can only trade with the trend. Now, this middle line changes from blue to orange. You can't tell at the moment because it is such a strong downtrend, but it does do that. In this case, it's orange, supporting the move yet again. So all 5 things are telling us is going to be a really good short opportunity. So let's fit it out. What happens? Our black arrow becomes our stop loss. And essentially what this is doing, if you look back to the peak of the last movement, it forms in line with that. Essentially, it's the last same place you can hold a trade before you find yourself on the wrong side of charting structure. Don't worry about that too much if you're new to this. But safe to say, the black arrow becomes our stop loss. We then have the entry point. It's on the first open or close that satisfies all 5 rules, which is on the open. So straight away, as soon as it flips, we enter. And then the black arrows lock in the trade over time, taking risk down and making sure we don't get too greedy and expect this move to go on forever. So if you just follow the system exit, you come out when the candle hits the black arrow. We've come down, we've come back up slightly, short-term momentum's turning against us, and it tells us, you know what, now's a good time to quit. That is a 60 pip move, give or take. And for context, 60 pips doesn't sound like a lot. Beginner account, pound per pip, that's 60 quid. It's £180 if you're trading on £3 per pip, which is slightly more intermediate. And that's a trade that took the best part of, I think, about 28 minutes to that black arrow exit. There is a better result we can get, of course. This market did move down before moving back up. The total potential, and you're never going to get every single pip out of a trade. It's just not possible, but you can certainly take a few more pips out once you're used to managing these positions. You're looking at 122 pips worth of movement, so almost doubling the trade, just over doubling. Now on a pounder pip, 122 quid. On £3 pip, 366. It's only for essentially about 25 minutes work on that particular setup. As I say, it's not the only trade we got. So if I zoom out, you can see that the Dow dropped pretty significantly yesterday afternoon. If you have a look to the movement before, okay, this looks like a trade. It actually isn't a trade. It's inside the band. We need to be below the purple. By the time we wait to get below the purple, and we close just here, if you look backwards, the trend is against us. We need to trade with the trend. So we completely avoid this kind of really volatile, kind of flat moving region. It is moving, it's just not moving anywhere we want it to. We actually get the entry with a different type of trade called a continuation. Intermediate trend is orange. The vector averages change from green to red. We get an entry at the close of this candle, confirming those red vector average changes, and our stop loss becomes the recent range high. So you would be looking at the top of this green candle here. We take the movement down, comes back up, profit to be made on the way. What happens is if you exit, then you're not holding it, then you can get back in with another green to red VA change. Enter on the close of this candle, stop loss at the top of the candle as that's the range high, follow it the entire way down. There's the opportunity here for essentially a 5 or 6 to 1. I haven't measured it exactly, but just visually, that candle width is 1 to 1 repeated on here. There's probably about 4, 5, 6 of them repeated on there. We then get another one, red to green vector average, back to red vector average. Entry comes in here, stop loss at the top of the candle, and this actually gives you an even better entry to the opportunity that we just discussed a moment ago. This is all we do. Follow those 5 rules, take continuations when appropriate, and we've been doing this for years. Come along and join us, find how we use these tools, but more importantly, trade alongside us. From 7 o'clock tonight, we'll be doing an hour and a half, be about 20 minutes of introduction. We jump onto the charts, we show how to trade it, and if there are any live trades available, then we will run them with you. So learn a bit about the markets, trading intraday, and hopefully make a bit of money for your trouble as well. So there'll be a form around this video. Come and join us, and I hope to see you there. Bye-bye for now.